That's how I started real estate. Out of necessity,
Wow.
because I needed to find myself a place to stay, and
Hmm.
I wanted to find a solution to me not being able to house myself. So that's why I
Okay.
started investing in real estate.
So you started with your first purchase, you said in 2012, 2013. Now we're in 2020. Like, what does your portfolio look like now? Hello, and welcome back to the Very Real Estate Effect podcast, a show focused on real estate investing in Montreal. Today, I am very proud to have a wonderful guest, Uriel Bigot, and I will share a little bit of the story on kind of how we met. But first, before we jump right into it, if you like the content and if you'd like to continue supporting us, please subscribe to the podcast, leave a rating, give me some feedback, send me some comments. I always love to hear from you and what you'd like to listen to and get some information on. So, without any further ado, hello, Uriel. Nice to have you here.
Hi, Excel. Thanks for the invite. I really appreciate it.
Well, I'm very happy that you're on. We spoke together a few times before setting up this interview, and even just before starting to record, we got into it. So I'm glad that we actually pressed the record button. We were introduced through a common friend, Roberto from Multiprêt, who's put us in touch because you, amongst other things, so you're a real estate investor. You also have a YouTube channel on real estate investing, and you've launched, and as an entrepreneur, you've launched a Cruncher, an app that's actually quite useful. I have to admit, I downloaded it, installed it, and I've used it a little bit. So we'll talk a little bit about that later. But first of all, how did you get into real estate, man?
Wow. So my story is I'm originally from Benin. It's a small little country on the west coast of Africa. And I moved to France back in 2003 for my studies. I was studying engineering, computer science, and telecommunication in a little city called Troy. Troy City is about 1 hour and 20 away from Paris. And when I was done with my studies, I moved to Paris to do my internship. And what you have to know is that the market in Paris is really crazy. People complain here about Quebec about the fact that occupancy rate are really low. Trust me, you haven't seen anything. Paris,
No.
you put on an ad today to rent your place. The day after, you have 20 people lining up. And it's
Mhm.
not just 20 people; it's their parent, and
Yeah.
also because their parent have to sign up for them. So even if I was making a decent living in Paris, I didn't have any parents in France. I was by myself, so I had nobody to sign up for me to back me up because they don't care about how much you make. They want to have 2 or 3 people backing you up on the lease. So basically, if you are moving in with your girlfriend, both, I mean, your parent, yours and hers, have to sign up for you to protect, just to make sure that the landlord is safe and actually he's going to be receiving his rent. And I didn't have anybody, so obviously my father wasn't really strong. So I went through a lot of struggle to find a place. I slept from place to place. I slept at some friend of mine. I couldn't find a place. I ended up sleeping on the street, literally. It's called RERI. It's a subtrain station really close to La Défense where I was working. I will always remember it. I used to sleep in there for a couple of times, for a couple of weeks. Then after that, I found a shelter somewhere, and I was working. I mean, I was working, making
I know,
decent
and
income.
that's the craziest part of it all is that you're a student. You actually got a good internship at La Défense, which is huge as a business center. I think it's Europe's largest. So you're pointing the finger on a real social situation that people need to be aware of.
Yes, so despite making good living, I had enough because what the landlord usually asks is for you to make at least 3 times the rent from a revenue perspective. I was making almost 5 times that, but I still couldn't get a place, so I ended up sleeping on the street. The best part was when I was end up sleeping at work because the beauty about sleeping at work was that they had multiple levels. I was in what's called La Tour Franklin at La Défense, and they had my company, which back then was named Solucom, now it's named Waystone. Beautiful company, love the experience. They had multiple level, and one of them they had showers, they had kitchens. So I was like, well, instead of just sleeping left and right, let me just sleep at work because when you look at it, I'm gonna be the first to show up. I'm gonna
Yeah,
be the last to leave. So,
high productivity.
dude, only positive, right? So I ended up sleeping at work for a while. I ended up sleeping also on the street, like I mentioned. And the worst was at some point I was fed up. So I decided to move back to Troy, which was like 1 hour and a half away from Paris, because my friends, which were in the back then was still studying, they had places over there. So what I was doing is that, like a fool, I would be partying with them all day because we all know that university is not about studying, it's about partying. So I would be partying with them all day and then actually all night. Then I would go to sleep around 2 a.m. Then I would have to be awake by 5:30 because the first train was at 6:05. And I was the only one where there were no security checking whether you paid or not. And obviously, even if I was making money, I was still cheap, so I wasn't paying.
Yeah. You didn't pay your ticket. That's
exactly.
fair.
So I admit it. Don't keep this against me. For a while, I didn't pay the train ticket, and I was the only train where there were no controllers. So I was like, you know what, I'm gonna get that one. So
yeah,
I wasn't sleeping much, but finally, after a while, I ended up finding a place. So all that to say that I struggle a lot when it comes to housing myself. And that's when I came up with the idea of saying, well, if my money is not good enough for someone to rent me a place, most likely my money is going to be good enough to buy a place. So it was always about finding solution. Even when I found place, it was like small studios. It was not really stable places. I was still moving around. So I decided to buy. So that's how I bought my first apartment. It's funny. It was a two-bedroom apartment in a city called Cergy.
Cergy Pontoise.
Right after that, Cergy
Okay.
Préfecture.
Okay.
And it was really nice because actually I'm currently in the process of selling it. And we can touch base on that later on. And I bought that place, and right away I put it in rent. I never lived in it. I put it right away in rent. After a while, I moved back. I moved to Canada in 2012, but I kept investing in France because I felt like that's what I knew, right? So I bought a second apartment, a third apartment, and I kept investing in France. And then at some point, I was like, you know what? Let me just check the market here, right? So I'm still renting a place here. I'm gonna buy a place for myself. So I'm someone who reads a lot. You can't see it now, but on my background, you have a full load of books. And I have been a big fan of something called Big Pocket. It's
Bigger Pockets.
Bigger Pocket. They're
Yeah,
really big in the US.
Yeah, I've listened to hundreds of hours as well. Yeah.
They talk a lot about house hacking.
Yeah.
So I decided, you know what? I'm gonna do house hacking. I'm gonna buy a duplex. I didn't want to buy a condo. I didn't want to buy a house, even if they can be good investment. But from my perspective, I really wanted to generate income without just counting on my own revenue. So I bought a duplex, and after that's a story, man. I kept buying and buying and buying. Now I'm building as well, and that's how I started real estate out of necessity.
Wow.
Because I needed to find myself a place to stay, and I wanted to find a solution to me not being able to house myself. So that's
okay. So you started with your first purchase. You said in 2012, 2013. Now we're in 2020. Like, what does your portfolio look like now?
So my portfolio is really diverse. So I still have my apartment in France. I have 3 apartments in France. I'm still managing. I'm selling one, by the way.
Yeah.
Here in Quebec, the first thing I bought was a triplex, actually was a duplex, but I converted it into a triplex. I refinanced it, and then I realized, wow, fuck, there's a lot of money here.
The magic of refinancing.
Yeah. What is this?
Yeah, you can do this here?
Yeah. Sell the place? I mean, what is this?
Yeah.
So when I caught up on that, the first thing I did after that is to buy another triplex. I hated it. It was far from my place. I was managing myself. I hated it. And I ended up selling it. After that, I bought a 4plex. After that, I bought a 9plex. After that, I bought a 7plex. Right now, I'm buying another 6plex, and I'm also building 8 6plex at the same time. So,
whoa. Okay, so there's a lot for us to unpack here.
Yes.
Wow.
So what happened is that for me, each transaction has to be a bridge to the next one.
Yes.
Whether it's from you building your portfolio, whether it's from you building experience, whether it's from you being able to show an investor what you're capable of doing, right? So everything I do is always like, just in chess, like thinking about the next step, right?
Yeah.
How does this qualify me for the next step? So that's how I did my investment, and I always trying to go to larger and larger and larger, and that's how I got here.
Okay, so you're at about 25 doors now?
So rough, if you add the one I'm building, I'm around 70.
70 doors. Holy moly. Okay, good job. And then you said you're building sixplexes?
Yes. So I'm building 8 6plex, and one around. So without those 8 6plex, I'm roughly around 25.
Okay.
But if you add those, I'm at 70.
Okay, you're at 70. Okay. And then at some point, we'll pick one of them and try to go dive deeper into the numbers and understand exactly how you did it. So you said your first purchase was a triplex, then you refinance that and move on to another one. Can you kind of walk us through the process in your head of like, the sky's the limit? And I agree. For someone, when I explained to my sister that here you could refinance, she just looked at me blankly. She's like, wow, you can do that. Like you can't do it in Europe. And it's such a magical tool of being highly leveraged.
And the beauty of this is when I explain this to my friend, which are still living in France and who are heavily investing in France, they just, like we see in Bon in Québécois, ils capotent. They go
Oui.
crazy. They're like, what do you mean?
Yeah,
Like,
yeah.
you don't need to sell the place and you get money from the bank?
Yeah.
So,
and what the way I pitched it is like, you just reload your mortgage. And they're like, what? No, it just makes sense.
I call it the gift that keeps on giving. Like building here is just like, it's crazy. Anyway, so the first thing I bought was a duplex. So, and this was back in 2016 here. The way it happened is that my wife and I, we made a decision to buy a place.
Mhm.
We were living actually in one of the largest tower in Centre Sud-Ouest here in Ville-Marie.
Mhm.
It's called Les Trois Pignons on Bercy Street. And we were looking for a place. We met a great broker, Romain, and we went through a lot of things. Like I saw all kind of garbages. But one day we saw one place, and we saw it on Monday. We make the request to visit it on Tuesday. We made the offer on Wednesday. It was accepted on Thursday. So that's really what it happened. Way it happened. And funny thing is, on the same street where we were living, I just had to go up the hill, and I was there.
Perfect.
So we knew the area. We loved the area. I saw the potential in the area as well. And basically, it was listed at 485. The broker did a great job. He listed below the value. I think it was worth 500 something. He listed at 485. Me, the way I see things is when you know what you're doing, there's no hesitation. Like you got to get in those things like
yeah, yeah, it's in the speed of execution.
So we made an offer at 525. I was like, my wife was like, dude, you do whatever you want. I'm not losing this place. Like, you know what I mean. When
she wanted it.
She wanted it. I mean, there were no way around it.
Yeah, and you have to satisfy your wife. That's number one.
Always. That's always. So we made an offer at 525. It was listed at 485, and it was no hesitation. We went in full throttle, and we got it. We negotiated down to 517 something after the inspection.
Mm-hmm.
Most of the work required by the inspection still hasn't been done. Just to
That's okay sometimes.
And right now, okay, the funny story after that, what we did is that we say, you know what, how do we maximize the value of this place?
Mm-hmm.
Getting it for a while. Then I came across something saying, I'm from Africa. My mom liked to visit. And what you got to know is that you never want to mix your wife and your mom at the same place. I mean, this is basic rule. I mean,
wise advice.
Take it from me. You don't want to mix the two. So we bought a duplex, which has a basement. It was finished, but it wasn't really up to date. So what we did is that we injected a 30K, fully gutted out, rebuilt it, and we built a full-blown, like totally independent apartment. This is currently where I'm living now. So there were already two separate entrances.
Mm-hmm.
There were also one connection to the upper level where we were living. So what we did, we fully built it. We had a kitchen in there. We had a bathroom in there. So it became a full-blown apartment. And then my mom will come over, and when she wasn't here, we said, what about just renting that place? I mean, back then I only had one child. It was me and my wife. So we rented the place on Airbnb, and believe it or not, in 1 year, we recouped 100% of the investment.
No, I'm not surprised. Yeah.
It was like, okay, there's something.
No brainer.
I mean, there's something here now. So I got the place where I drastically increased the value. I totally paid back for all the renovation, which, by the way, didn't even came from my pocket. We can talk about that another time.
Yeah.
And it was fully reimbursed by the first year of operation. So what we decided to do, you know what? Let's do the same thing upstairs, because it was a duplex, right? So we had our ground level, the basement, which was just done, and upstairs as well. Funny thing, the tenant who was living upstairs was the daughter of the person who sold us the place.
Okay.
She was in a phase where she wanted to move to get closer to her dad, who was a little bit sick. So we found an agreement. She left the place at her own on her own terms,
Mm-hmm.
and renovated places. I think we put in like 15K. And first year of operation, 40K.
Exactly.
We're like, okay, there's something here.
Yeah,
Right?
and you're also at the prime time for Airbnb, which was a couple years ago. Now there's a lot of listing, there's a lot out there, but in that time it was a better market.
Funny thing, actually, because I was talking to a company who does management, because we want to put in management. We are no longer doing the Airbnb downstairs because now
Mhm.
obviously they have more kids. So we use the basement and the ground level.
Mhm.
And also, I mean, all the expense were covered already. So we're like, we don't need to trim them to mill the car anymore at that level. So
Yeah,
we're only running upstairs. Upstairs, I got also the permit for upstairs. So right now I'm fully legal. And the funny thing is, I was talking to a management company, and what happened is that there were 12,000 listings in Montreal before the COVID. Now there's
yeah,
only 7,000. So that's a great thing because now, first, I'm legal. There's less competition, and people are gonna come back. I mean, it's just
exactly.
knowing. That's what
Tourists are
I'm.
going to come back, students are going to come back, and it's funny you say that because I have an empty unit right now, and it was technically on the market. It's a 3 bedroom in Hochelaga Maisonneuve,
Nice.
very freshly renovated and stuff, and I'm now fully furnishing it, and I'm going to put it on the Airbnb market.
Yes, plus Airbnb give you access to long-term rental, to
Yeah.
short-term rental. So, and what happened is that when I compute the numbers now, obviously it's a little bit lower now due to the COVID. But even if I'm still getting booked, I'm
Mhm.
booked fully through all the way through end of February. I'm making enough, even in COVID, to pay for the full mortgage, the electricity, the heating, and the
Yeah.
taxi. So basically, I'm
Yeah.
living rent free.
Yeah.
And all that because I made a move and say, you know what, even if it's over, even if I know there's a bidding war, even if I know that a lot of people are going to be bidding on this, I'm comfortable paying a little bit more.
Mhm.
And the ice on the cake is that I got the letter from the city last year, and they value the building at 690.
Nice.
I bought at five something,
Yeah.
and where all the renovation was covered by the income,
Mhm.
and where basically I'm still living in it, and I'm not paying a dime to house myself.
No,
So
and the thing is that that's something that sometimes I have the conversation with investors that are starting out, and oh, I feel like I'm overpaying. And the thing is, if you pay 15K or 20K more now, but you start, it's your first property, you learn 3 years from now, do you really care that you overpaid 15K? Never.
and it's funny you say that because I this week I'm releasing a video on YouTube where I'm exactly talking about that. It's
Mhm.
crazy, but people don't realize, like, and even my closest friend, when they try to invest, they are hesitant. They don't want to pay a little bit more. I'm like, dude, this
It's
is
worth
my
it.
story.
Yeah.
This is my story. I'm not telling you this because obviously I'm a broker as well. I'm not telling you this because I'm a broker. I'm telling you my story.
Mhm.
I paid 517, and 4 year later, this thing is worth 700,000, and that's the municipal evaluation. That's not even the real evaluation
Yeah.
because we all know that one is higher.
Mhm.
And if I was selling that as a condo NDVs, I'm convinced I can go to get 1 million over there. So
Get a million in total. Yeah.
think about it. What
Yeah.
is that extra 20K I paid or 30K I paid is
Yeah.
worth nothing.
Yeah.
So and that's why
And it's
I try
financed anyways.
to just go for it because there's no way your money is going to bring you more return by staying in your pocket because you don't want to overpay. And even I don't like the word overpay because you want to pay over the value,
Mhm.
the listed value. That money is never going to be worth more in your pocket than in that building. And the thing is, it's not because it's listed at one price that's the value. That's
Exactly.
just
Yeah.
the listing price.
That's the
The price
starting
at which it's
price.
listed has nothing to do with
Yeah.
the real value of that place.
Yeah.
So
I fully agree with you. And a lot of people don't see the difference between price and value. Price is what you pay, value is what you receive. And if you're able to see potential for something that people say, oh, you're overpaying, you're looking at it and you're saying, this is a bargain. I'm making a great deal here. Because you know you can raise the rent. You know you can do 2 units that you can put on Airbnb and fully recoup your investment the first year. I mean, that's gold.
the main challenge is that people are, excuse my language, are fucking lazy. That's just
Yep.
reality. People are fucking lazy. They watch YouTube video day after day telling them that they can bargain down a buyer in a market where those people saying those things maybe used to buy 20 years ago, 10 years ago. We are in a market where if every single seller has 8 buyers. So unless you are working off the market and that require knowledge, require contact, require abnegation, if you don't have those and you want to buy on the regular market, forget about it, man. But
Yeah.
then even if you overpay, and I'm quoting here, look at the big picture. I'm not a big fan of Bitcoin because I still feel like there's something not stable about that thing. But think about the person who paid for Bitcoin at 20,000 compared to the one paying at 10,000. Were they overpaying? Maybe. Are they making big money now? I think Bitcoin right now is at 40,000.
Yeah, I think it's above 30,000 something. Yeah,
30 US, right? So personally, I'm like, this thing is crazy. I haven't bought any. I regret it a little bit, but still, you like, think about it. So people need to look at the big picture and realize that what you're paying has nothing to do with the value. And it's all about understanding also where you want to bring that asset.
Yeah.
You do not buy for today. You buy, and actually, I'm always saying this, you don't buy, when you want to buy, you have to think about selling, right? So the question is, what the asset I'm buying today, how much I'm going to be selling it in 10 years?
Yeah.
If the leverage is there, if the yield is there, I mean,
it's a no-brainer.
Just go on, you know.
Yeah. But it's interesting the point you're making, because for so many things in our lives, we're pushed to see short term, and people, the stock market has been fantastic this year. Enfin, in 2020, there's been a huge recovery, and so many people made money within a 6 months period. And they tend sometimes to think, well, the real estate market must be the same. And sometimes I have to remind them, like, no, you're investing for 20 years. For sure, it'll be worth way more 20 years from now, even 5 years from now. It's just that it's not the same pace, and you have to buy in now, and then you have to sit on it, and you have to work on it a little bit. You have to optimize it. But the value is, I don't want to say certain or guaranteed. It's just that it's going to be there.
It is. Look, I want to give one example, a couple of numbers that, because I do a lot of research, but also because I have access to so many data through my my application, my startup Upkey. I'm doing some research, and I'm like, one thing also we have to take in consideration about Quebec is that, look at these numbers. Quebec is basically, when you look at square footage, 1.6 million square meters, right?
Square kilometers.
Sorry, square kilometers. Sorry.
Yeah.
And the population is roughly about, I think, 8 million. Okay. Now let's look at other countries which went through what we are going through right now. Look at France. The surface, I think France is about 650,000 square kilometers, and the population is about 70 million.
70 million, yeah. The density is just so different.
So this is where we are, right? And this is all what we can go after, because the whole continent is dying. People are moving away because unemployment rate is through the roof. We have the advantage in Canada to have, first of all, we have a border with USA. Nobody's going to nuke us. I mean, nobody.
No, we're fairly safe here.
Exactly. We are safe because of our cousin down south first.
Yeah.
We are, the economy is flourishing. Before COVID, I mean, in Quebec, we have a surplus. These countries in Europe, they haven't seen surplus for the last 20 years.
If not more.
So strong.
Yeah.
We have population, we have needs of population. So all the fundamentals, I mean, when you look at real estate, all the fundamentals are there to show that it's going to grow. And the example also I like to give is, look at the island of New York back in 2000. I think the average price for a house was around $400,000 US. When we had a crash in 2008, it was around, I think, 800. It went a little bit lower, but right now it's at 1.3 million. So what I'm trying to portray here is that when you are living on cities like island or places where there's
where there's a finite amount of land,
exactly, strong activity, well, real estate will always grow, because it's all about supply and demand, and also the inventory. The inventory is, I think there's about 890,000 housing in Montreal. That's nowhere near enough what we really need.
No.
And same thing when you look at San Francisco, even if it's not an island, because it has that geographic situation with the water, the cliff and everything, same thing. They went from 400 to 1.2. So no matter what we would call it, crisis, crash, boom, bust, whatever, real estate has always been improving. The value has always been going higher. And it's just a matter of going through the cycle. You have to be able to sit on it when things go bad. You have to be able to take advantage when things go well, because they will go bad at some point. They will go well at some point. But no matter what, if you know what you're doing, you're gonna get that upside. So I mean, there's no point to be caught up with, okay, I'm paying 20,000 too much. Look at the big picture.
Exactly.
That thing's going to be
Yeah.
worth 200 more thousand. And
Mhm.
and you and me, we can give proof of that. We went through it. I mean, we
Mhm.
have assets right now which have been drastically gaining value because we got into the market, right? So that's really my message to investors. Stop hesitating and just get in, because the more you are hesitating, the more the value are going higher. And this is a great window of opportunity. The rates are low. There's this uncertainty, so some people might be sensitive to selling at a rebate. It's still a bargain. You're still gonna have to negotiate for that, but
There's definitely opportunities right now. Some people are scared. There's more listings, and there's definitely opportunities for those who know how to look, whether it's on the market centriste or off market. I love that you talk about the fundamentals, and it's true that. And I'm an immigrant as well here, and I've always looked at Canada as a kind of a promised land, whatever that means. But just that the opportunities was there. And I remember my father, when we were young, always telling us, Excel, there is space, there is resources. And we used to joke and say there's women, because I was single at the time. But it's true, like there's wood, there's water, there's uranium, we have cheap electricity, there's a whole bunch of minerals. There's everything that we need here, and the density is low. It's a modern economy. We have the rule of law, we have property laws, like you own stuff, no one's going to come and take it away from you. It's to me, Canada is one of the best and safest countries in the world, and I'm extremely grateful to be here and to be an immigrant, to have gotten my citizenship, and so on and so forth. And it is extremely reassuring to be investing in that kind of environment, because nothing's ever for sure, but you're in a good position.
And also, I love what you just said about the fundamentals, because I always look at them compared to the rest of the economy, compared to the rest of the world. Look, for example, we have so many leverage. Look, one example: when you have crisis, what do? You at some point you need to recoup that money. So right now, all the money the government is spending, they need to recoup that money. But the place you don't want to be are places where there's no room for that. And I'm gonna give you one example. In France, right now, I mean, we have been, because I'm from France, but even if I'm Canadian now, I look closely at what is happening over there. Mm-hmm. We have been in debt for so long, and the taxes, mainly on consumption, meaning TVQ, TVS, it's already at 20%.
Yeah.
Right. There's not much room to go to increase that. Right. Here in Quebec, we have 5% for the provincial, for the federal. We have 10% for the provincial. You still have room to increase if you need to clean up your economy. Right. Mm-hmm. There is a massive amount of work in this country, especially in Quebec as well, because it's a city where you have so many technology, video game, artificial intelligence, engineering. So when you look at that, and I believe that the future is all about immigration. I think immigration is going to be the great thing in the future to really help people to get out of this crisis, especially here in Quebec, because if you look at it a little bit, we have, I think, 3.5 million of people who are out of the market because they are too old on an 8 million population. So, and
Quebec needs immigration heavily.
Exactly. We are not making enough kids. I think
there's not enough babies per woman.
Exactly. We are at 1.59 in Quebec, and we should be at 2.1 to renew the population. So when you combine all those things, is that there's going to be a massive influx of immigrants. Immigrants need to be put somewhere. They need to reside somewhere. And they tend to be more lenient on paying more, right, than the local. One example, I was renting at some point a 40 meters square in Paris. That was like, I think I was paying like $1.7 thousand, which is roughly $2,200. For the same thing here, I might be paying I was paying when I first got here, I was paying $800. Right. So people are more lenient to pay more. So that's going to drive the price up. The economy is stable, is good. We have so many resources. There's no war, and there's, like you say, rule of law, because I'm also from Benin. One of the reasons why now I stopped investing in my hometown is because the rule of law is not really well established. You can buy a land the day after someone build on it, and if you start talking too loud, They're going to bring you to the justice because they know the judge. They're going to pay the judge, and you're going to lose. So,
and then it's going to be your fault.
Exactly. So that's why I'm like, for now, I'm only investing here, even if
Yeah.
I'm always keeping an eye over there. But all that to say, Canada, Quebec is an extremely well positioned for the next century.
Yeah.
Because we have all those resources. I mean, electricity is one of the cheapest because we do all through water. So I believe we are well set, and all those conditions will definitely drive the price up. And people need to get on the train, otherwise they're gonna miss it.
And the best way to start investing is now.
Exactly.
As always.
Exactly.
Don't wait in 2 years. Don't wait for the next crash, as people say. Just start investing now. As you mentioned that you are involved in building 8 sixplexes. I'd love to talk about that deal a little bit. Like, how did you find that? How did that opportunity come about?
So that opportunity, actually, I'm working with some partners. So let me talk about the deal I did before that got me there. It's basically the 9plex. The 9plex is actually one of my best deal ever. I came across that deal. I was talking to management company, and this is something. I mean, this is a nugget I'm dropping here. The best way to get deals is actually to go to the management companies, because they are the first to know when one of the client want to sell. So I met the company, and one thing I do first when I want to start investing in a new city, I go to that city, I meet 3 brokers, three management companies. I met them, and one of them, we really had a good vibe, a good click. And I asked them, "Do you have a seller who want to sell?" They told me yes. They put me in touch. So this was totally off the market. So no bidding war. I had the time to really negotiate. Didn't really negotiate much. He wanted to sell it at $750, a 9plex in Sherbrooke. We ended up buying at $722,500. And what we did is that the plan for that one was always to, I think, real estate, and this is because I come from the startup world, it's about creating product. You have to create a product which is aligned with your market. And it was in an area where there were a lot of students going to university. So we decided to create a concept of fully furnished, equipped, everything. And what we did, we even pushed the envelope a little bit, because some of the apartment, what we did is that we fully renovate them, and we put 2 bathrooms per apartment. Basically, it was for the 4.5. Each room had its own bathroom.
Okay, so you could rent to 2 separate tenants.
So the funny thing is, because we want to refinance, we always have one lease. And usually is that the product works so well that people were coming with a friend, and they were all both on the lease. We end up not doing furnished because the logistics was too complex. But we bought it. The revenue were around 60,000. Right now, the revenue at $130,000.
Whoa, very nice.
So we went from a building that we bought at 720. I mean, I'm going to rough it off at 750 to add the tax, the bienvenue, and all that, the welcome tax. And we injected 250,000 in it. And the new value, the market value is at 1.8. The bank refinanced it at 1.7. And we actually we even refinanced conventional. We didn't go insured.
Okay.
And the plan is in 2 years to go insured and get more equity. So
exactly,
we basically went from 750, 250 of renovation to 1.6. To 1.7. We refinanced around 1.4. And so that was like one of my best project ever. It's like it's not even a unicorn. It's a unicorn with 2 horns, right?
and you want to find ways to replicate that.
Oh yeah. We are already doing that. We bought a 7, where we are doing exactly the same thing. We are buying now a 6, where we are trying to get a 6, where we'll be doing the same thing. We know the market. We know exactly which street will be good to do those kind of things.
Yeah.
We know exactly also which type of clientele. I come from the IT world, so we build a catalog of service. Basically, our 4.5. This is what type of microwave we put in it. This is the type of fridge. This is the type of color. We also build the plan in 3D before we start the renovation. They were rented like this. It was like really hot potatoes. They were rented really fast.
And your market for that is students from the University of Sherbrooke?
So funny things, we had students from the University of Sherbrooke. I even had people coming from Vancouver who were moving to Sherbrooke. They saw the ad. I had people calling me from France, because obviously I put the ad on Le Bon Coin. Which is in France. And we also have people who are workers who move to the city. So most of our clients come from outside of the city.
Yeah, which is very good clientele.
Yes.
Yeah.
And also the thing our pitch is this: we are not renting to student.
Mm-hmm.
We are renting to their parent.
Yeah.
We are giving the parent the insurance that their kid's gonna have a place where their daughter is not gonna have to share a bathroom with her friends,
Mm-hmm.
right? This in COVID time was actually great because we started the renovation right into COVID in March, and everything was rented by June, July.
Mm-hmm.
And this is where and we saw it ourselves. The people who were moving into the place, it was parent moving in their kids to the place.
Yeah.
So we hit on the bullseye. Like I
Yeah.
mean, our
Smack
marketing was
on.
targeted on the parents, and those are the client that we got. And that's basically out of there. I got like maybe 250K out of there, and I took it. I put it into a partnership with some other partners who already have extensive experience in buildings, and right now they're taking care of that. They're taking care of buildings, of building a 8-6plex for us, me and my partner. But we are passive on an investment because I rather put my energy where it makes me more money, which is on retrofitting all the units.
And but so this building, so you're an investor in it. Where is it in Sherbrooke as well?
Yes.
Okay.
And the market I'm focusing on is really Sherbrooke because I feel like Montreal is still really good. It's just that the speed to recoup your money is not good enough for me. My projects are typically about 6 months, right?
So purchase to refinance?
Yes.
Wow.
Yes.
6. Okay, I can see how you could do that in Sherbrooke.
Well,
I thought we did well, and we did it in 14 months.
Well, so it's 6 months, but the last one we did drag up a little bit for the refinancing. We ended up doing that in about 8 to 9 months. But the last one we bought was a 7. We bought in end of November, so 1st of December, and you see by end of January the building is going to be totally empty. I have sat down with every single tenant and we negotiated with them.
Yeah.
This is the challenge about optimization, right? Because you want me to do optimization. You want to increase the rent, most likely you have to negotiate with the existing tenant to take over the place. And we always compensate them. There's no doubt about that.
Can we take a minute or two? Like, sorry to cut you, because this is a very important point, and I've had a lot of questions about this. What are some of the tools in conversations that you use to be able to buy the lease back? How do you go about it?
So the first thing is this is also one of the reasons why I'm not too keen on Montreal is because you have to put yourself in the tenant's shoes. You're going to take over the lease. That's fine. I mean, the reason why we took over the lease for the 7plex was that there were so many renovations. The electricity has to be redone. Plumbing had to be redone. The roof was falling apart. The balcony was falling apart. So the some windows were totally cracked. So they understand where we're coming from when we told them we got to take over because of major renovation. Now, the reason why I love Sherbrooke is that it's easy for someone who's paying $600 to move out because they're gonna get something else. And worst case, it's gonna cost them $700, right, to get something equivalent or even better. So usually, what I would do, I would tell them, guys, I'm okay to compensate the difference, right, for a couple months, like 6, maybe max gonna be 12. I'm not gonna go over that. Now in Montreal, someone who's paying, and I had that, in my 4plex. His name was Jorge, a real nice guy. His kid was born in the place. He had been there for the last 17 years. He was paying $600 for a ground level and basement of a duplex, and he had like maybe 2,000 foot square. There's no way he's gonna find something similar.
There's no substitute for that.
That's where it's hard to get people out in Montreal because it's hard for them to find something else. In Sherbrooke, that person who's paying $600, he's gonna find a substitute. Like most of the tenants, when I break the news to them, they're like, "Yeah, I got to think about it. I don't want to move." Blah blah blah. The week after, they come and say, "Hey, we found something.
I found something. I'm moving out at the end of the month."
Exactly. Right. That's what it comes down to. If they are not able to find something similar at a reasonable price, good luck trying to get them out. So what happened in Montreal is that we ended up paying $7,000 plus another $2,000 because we didn't manage the relocation company well. It cost us roughly $30,000 to get 4 people out. That's what it cost us in Montreal. In Sherbrooke, honestly, the most I paid so far was $1,800, and the guys were happy about it because they were moving from a place where they were paying $600 to a place where they're paying maybe $700, but it was
way better quality. Exactly.
Exactly. So for me, it's always that is what it comes down to. Are you able to help people move to the next phase of their journey by helping them with relocation fee, by helping them by covering the difference, by giving them a little money to incentivize them to leave earlier?
Yeah.
Because I know that in those cities they will find something, right? They will find something. If they can't find something like in Montreal, so okay, now he's paying $1,200. So yes, he got 10K out of me, but when you look at it in the long term, I'm not sure it was a good deal for him. Right? He could have charged me 20,000, still wouldn't have been a good deal for him.
Well, and the thing is that there's different ways to look at this situation, because I've heard people say, yeah, but it's not fair. This guy was there for 17 years. He was paying 600 and stuff like that. Okay, but the reality is that also the previous owner didn't do him a favor by not increasing the rent, because if he's paying 600 but he knows his apartment is 1,000, then he should be smart and he should plan, and technically he should be saving parts of the difference between what he actually pays in the market rent to be able to, in quotation marks, subsidize himself for later. And so there's really different perspectives on, yeah, you've been here for 15 years paying 600. Now the market rent is 1,200.
And that's where it's challenging, because I totally agree with you. I mean, they are underpaying. I mean,
they are
underpaying, and now they have to catch up with the market, and that's a huge blow for them.
Yeah.
And the thing is, but at the end of the day, you're gonna have to go through that reality. That's why my strategy is more to invest in market where there is room for increase, but also there is room for people to find something else.
There's more mobility. I like that idea. It's a very good point, because we had looked at a bunch of properties in Sherbrooke. We never ended up pulling the trigger, but I like what you did, and I like the way you look at it. It's a very good point. It's funny because out of Sherbrooke, the comment I had heard was that the obviously the appreciation isn't as rapid as in Montreal, but in your case, you've actually fully optimized so that, yeah, it's going to go up at 3% a year, let's say, but you've done so much to increase the revenue that regardless of the natural appreciation, you're getting more than your money back in less than a year. I mean, that's magic.
And funny thing actually is that when I started investing in Sherbrooke, the cap rate were around 6%. Now they're at 4.5.
Yeah.
So I got a pretty good appreciation, but that was also because I did my homework, right? Some of the things I check every time, because when I want to invest in a new market, and right now I'm looking to new market because, like I said, 4.5. Well, you can overpaying compared to you are overpaying just like in Montreal. So I decided to move out of Sherbrooke unless it's off the market.
What are you looking at now?
So that's what I'm getting at. I'm looking at cities like Trois-Rivières, Drummondville, Granby, but I'm doing my homework. The things I will always check is, how is the vacancy rate? Is that I want it to be above 3%. I want it to be I don't want it to be balanced. I want it to be above 3%, which means that, well, there's room for me now to drag it lower, right?
Yeah.
And also because the vacancy rate is high, it means that people are rotating. I want to have a city where people are moving, just like because what I explained earlier. Also, I will check also the average revenue, but I'm always looking for, when I look into a city or an area, who is the top gainer? I mean, I want to find the city among all the city around which is having the rapid growth. So I do not only look at the at the speed of growth, but at the acceleration.
Absolutely.
I want to see that curve, like that hockey stick. What else I'm looking at? I'm also going to look at what is the average price. And let me rephrase. I will look at the speed of sale. I'm trying to find city where things don't sell within a week. I mean, my goal is never to buy one building. My goal is to buy multiple buildings. So I have to find a city where not only the first operation is going to be good, but the one after as well. And if things are selling too fast, it means those are signs of a market which is already overheated,
which is already hot.
I'm not interested in those markets, right?
No.
The last thing I look at is, I love them students, man. I love them students. Most of them, they're gonna tank the studies, so they're gonna be fired after 2 years, right? So they're gonna move, right? I mean, actually, we've been students, we've been at university, we know what it is. It's party time.
Yep.
And they are willing to pay. COVID or not COVID, a parent will send his kids to school, so they will pay for the rent, right? So I'm really keen on cities where there's university and CEGEP and things of that nature.
And catering to that market. And one thing I like about it is that that Mags, they're here for 3 years.
Yes. And most of them, they will get a girlfriend, so they want to move together. Also one thing I look when I look at the building is, and this is like a little nugget I'm gonna drop, is how many sublet do you have? If you have a building, the building we bought, most of them, the tenant of the lease wasn't even there anymore. Because when he was about to leave after 2 years, he got the lease to someone else because the place was hot, right?
Yeah.
The location was top notch for students. So when you start seeing so many sublease, it means basically that the place is so hot, they don't want to give up on it. So they're gonna go for an internship. They're gonna sublease to one of their friends. When they come back, they're gonna come back in it. That means that you have a hot location. And that's something where that reassures me when it comes to my ability to rent that place. So those are the things I look at. So population, I'm also tending to look at cities where at least I have more than 50,000 people. I want to have large cities, not too small cities. Like I said, demographics. Oh, one key element.
Industrial base.
Industrial base. Migration.
Employment. Exactly. Yeah.
What is the influx? Are people moving in or moving out? I had deals in Sept-Îles. I had deals in Saguenay, but those cities are dying, man. Those cities, I mean,
there is a population decrease.
Yeah, so I'm not interested in the population decrease. I'm just interested in places where population is rapidly increasing. So I run all those numbers, and when I find a place, then real estate is about being on the field. I mean, you got to go over there. So maybe I'm gonna take a drive to Grand Bay. I might not buy anything, but I want to feel the city. I want to see the city. So Grand Bay, Trois-Rivières, Drummondville. Those are the cities I'm looking at. I also like to keep them not too far from Montreal because I'm an active investor. I'm on the field, so I want to go visit.
And especially at the beginning, I mean, you're going to have to go over there frequently, so it's important not to be a 6-hour drive. Just before we move on, you mentioned a few minutes ago that you have a startup. Can you tell us a little bit more about that? Because that's real estate related as well, right?
Yes, actually, that's that. The way it started was because actually I was doing some market analysis. I was crunching numbers. I would go to the CMHC website, crunch numbers, go to Statistic Canada, crunch number, and I was negotiating a $100 with a seller. And we were about to close the deal. We were at the keg, no, Baton Rouge, and last minute he pulled off on us and said, "Guys, by the way, we just agreed on the pricing, but I want you to take over my current mortgage." I'm like, well, wait a minute. I mean, you could have told us that earlier. So we pull out a computer, we start running some numbers. Well, it wasn't practical for us to, it was
to take over the mortgage.
So we said, you know what? That didn't go through, obviously. And then we came to the conclusion, my partner and I, Chris, that we definitely need to find a way to have better tools to be able to quickly assess a real estate deal. So we created an application called UpKey. So it's available on the App Store and also on the Google Play. It's basically a super cruncher that helps you to run some numbers, to calculate the values of a building based on how the bank will do it, based on how the CMH will do it. It will give you rental information as well. You can go in there and also increase the rent and see how the value of the building is increasing. I mean, especially for beginners, it's really hard to throw in a 100K of renovation in the building when you don't know what's going to be the future value. Well, for you and me, Axel, it's easy because we know how to run the numbers, and we know that 100K that we're injecting is going to be an X5 for us, right? So it's easy to make that call. That's exactly what that application does. It helps you to assess the future value of the property. So you go to the application, you add the property information. It will tell you how much is worth from a CMHC perspective, from a Desjardins perspective. You can play around with the parameters to tweak that value. You can customize it. You can get rental information as well. And it's also basically a portfolio where you can store all the property you are analyzing. So we had a lot of success with it. Yeah, we had about 6,000 downloads since we put out the app, and now we are working on the next version, which is a more developed, intense product that we can keep for another conversation.
Actually, that's really relevant for our audience of real estate investors, and I'd love maybe for you to come back and tell us more about the app and what you've been working on, because we've talked a little bit more today about your real estate perspective, but you also have this entrepreneurial side where you've started a company to actually help real estate investors. So that's a real great fit.
Yeah, I have that background. So I'm an engineer by trade. So for me, it didn't make sense not to have solution. Plus, I feel like data is something that there is a cartel of data when it comes to real estate. So it's called the brokers. So and I'm a broker, so I understand how some brokers feel like having an edge means having exclusive access to data. But I truly believe that the value as a broker, the value that we bring to our client is not only through data, but it's through analyzing the data,
Yeah,
being
it's
able to
the interpretation.
Exactly. So my goal as an entrepreneur is really to make the data relevant and available for everybody through a key to democratize the access to data. We have some module right now where we are working on artificial intelligence, really to be able to come up with some deduction, come up with some conclusions saying, okay, you know what, this is the best area to invest. We are training some algorithm for that as well. The goal is to offer a platform where people can access the data and make educated decision based on data. So data analytics, valuable insight, and also obviously directly at the fingertips. That's what that company is about. And it was basically to solve my own problem, right?
Yeah. Oh man, you're coming back. We'll talk about this afterwards, but let's do let's talk about another episode just to be able to talk about that solution. Uriel, how can we help you? How can the audience here who's been listening, reach out to you and contribute in any way, shape, or form?
So first of all, through the app, I mean, the app is something which is really close to our heart. We love what we have done. We are continuing to work on next version, which will be really big, totally different, something really more meaningful for the user. So go download the app. So the website is UPKY. So it's UPKY. So Uriel, Papa, Kevin, Johan. It's basically come from we want people to upgrade their keys, right? Keys being the number of tools. Upgrade their keys being the number of doors they own. So that's really the meaning behind UPKY. So they can go check it out. They can reach me also through my Facebook. I have a YouTube channel where I have also a lot of content. I have been idle for a while because of my family situation evolving. Having new kids was my focus, but now I'm putting again every Thursday, I'm putting a video on there. I'm also really active on LinkedIn. Reach out to me directly on LinkedIn. It's Uriel Bigot. There's no tool like me. I'm the only one, so you're gonna find me easily. And just keep sharing our content, keep supporting the channel, leave reviews, because the goal for us is to reach as many people as possible. From an investment perspective, also I do some syndication, which is basically I'm working with some investors. 2021 for me is really the year where I want to do a big shift. Like I'm pretty proud of what we have done so far, but the goal for me is to double when it comes to size every single year. And obviously that goes through building new. That's one of the avenue.
Yeah.
But also building bigger. So I'm currently working on a project where we'll be seeking investor to build large complexes on the North Shore of Montreal.
Okay.
That's the objective for 2021. So, and also if you have deals, I mean, we're always looking for deals, always looking for opportunity. If you're looking for someone who knows what they're doing, whether it's me or you, who knows how to buy, who is not gonna waste their time because they understand the numbers, reach out to us as well. We are always open for business.
Absolutely. And I love to hear that because I feel like I'm in the same boat with the same vision. That the goal of all this is to build a community of like-minded individuals, and we can just help out each other. Because I don't see it in a competitive way. I think there's plenty enough properties for everyone to buy, and we're not really competing. So, thank you so much, Uriel, for being on the show today. It's been a real pleasure, and I look forward to speaking with you again a little later for your wonderful app, your Cruncher. And I wish you a fantastic day.
Thank you for the initiative. Thank you for the podcast. I mean, this type of initiative helps a lot. I think there's a strong community out there, and having places where we can regroup and connect, like your podcast, is tremendous. So thank you, Axel. Thanks for
No problem. Thank you very much.
Take care.
Bye.